There we go. Yeah, I mean the market's still still holding on at this stage to what it has.
Currency's very much the same as on a Monday when the currency charts are looking like they're looking, that there's just no point hanging around. Just get it.
Yeah.
Just go away.
Yeah.
Come back tomorrow.
Well, there are, what's going on with the FTSE? So we probably have, maybe this. Hello, Kumar. How you doing, buddy? How are we getting on? Okay, we got a little drop down in the FTSE 100 yesterday, as with the US markets. Just double check that we actually came up to a trend line in the end, and started to drop down. And now we probably have started a bit of a journey to the downside. We're probably looking for possibly a test of the monthly pivot. Might be of interest. Let's see what happens there. And it could go slightly higher. A few trend lines in this area as well.
Bit of a slow burn, mate.
Yeah, it looks like it, doesn't it? Yeah, look at that monthly pivot. That looks like a prime spot for if anybody's in any shorts. It looks like a prime spot for an add point. So let's see what happens there. Interesting in some respects, because when we look out on longer term time frames. So let's switch to the 4-hour and look at this long. There's another trend line down here, and that leads us to a bounce point right now. So this is getting squeezed, which is getting quite interesting now. So you can see that if this trend line is in play, well, I suppose it is in play. All trend lines are. Then that would potentially give us some sort of measured move. So the chart is now starting to develop in a way that timing is looking a bit more interesting, and it looks like we could even come down to test these lows. If we break to the downside here, break into the upside would lead us probably back into the gap, the higher end of the gap. So could still go either way. The way that that the market seems to be pretty keen and not too fussed about any of the developments of the story. So we're going to have to watch out now for the tests of these lows and the higher levels. So this point looks interesting now, and this point looks interesting, but price action is definitely getting squeezed here, mate. So I'm looking for some genuine movements in an area, and it's just ascertaining which way it's going to go. I mean, I'm very bearish about the market, but it still wouldn't surprise me to see testing of some highs before we really do start to tank, because there's just enough going on just to buoy it up. But let's come back to it in a minute, mate. I want to let you get the pound trade on, and then we'll come back to the open in a moment and see if we can get some sort of trade on.
Happy days, will do. Tiny loser yesterday on this trade, as our trail finished up just about here, and our entry was just about here somewhere. So just a tiny little loser. What a shame, really. Might have been a reasonable result had we managed it in a different fashion. We might explore that at some stage. All right, today, what have we got? We've got, are we open yet? What's the time? No, not yet. So last 3 bars on an hourly chart are these, 1, 2, 3. So we've got a genuine range again today. It's not just one candle. There's the low of that bar, and the high is of this bar here, which has yet to close, but is only seconds away. So I think we can safely place the long order. There we go. The long entry will be at 124.35. So a buy stop at 124.35. It's very, very close to where we entered short yesterday, 124.33, if I'm not mistaken. And the short, or the stop loss for the long, and the entry for the short will be at 123.87. 123.87, and that is a buy. All right, the sell is, of course, the reverse of that. It'll be a sell stop at 123.87. And the stop loss, which I've forgotten, is at 124.35. Oakley dokley. So there you go. Entry for the long, 124.35. Stop loss on that is at 123. Oh my goodness, how can I forget these things so quickly? 80, 80, 80, 80, 80. You little grommet. 123.87 is the stop loss for the long and the entry for the short. And the stop loss for the short is at 124.35. So there we have it. Just updating yesterday's, the entry or the range was here. This candle, this candle, this candle. We entered short on this bar here. And we were immediately in trouble, really. But we didn't hit our stop loss. Well, I think we missed it by about 8 pips or something like that. And then the trail began. So stop loss down to here, stop loss down to here, then stop loss to here. And that was all she wrote as it came back and kicked us in the bum. And I think it was about, can't remember exactly. If that was entry 33, we got kicked out at 15 pips. And so it was a 25 pip loss on a risk of, I think it was about 65, something like that. 10 above there. 15 above there, rather. So yeah, about 65 pips. So, you know, SFA, and not to be concerned about that. That's the idea, of course, of trailing the stops, so we don't get burnt. And when we do get a good trade in, then the losses are small, the wins are sizable. Isn't that what we're after, guys? Yep, that's how she wrote the rule book, and that's exactly what we're trying to do. All right, so we won't dilly-dally here. You've got the parameters around today's UK breakout or open breakout on pound US dollar, and Ash will take us more through the FTSE.
Yeah, let's have a look at the FTSE. So we've got a FTSE 100 which is on its cruise to the upside right now, but I'm just looking at how it opened up, and we got around about what are we looking at here? Looks like 15% of stocks in positive territory. We're just testing now. This is going to be quite good for us, because if this is going to come down, then we're going to get a chance to really have a look at this this monthly pivot and see what how the market wants to react here. Now it's trying to get through. It's got to get through the monthly pivot. It's got to get through the daily pivot. It's got to get through the weekly pivot. So a lot to get through here. So we're just looking for some bars and some hints and tips of where we go. But look how this this first 15 minutes is currently shaping up, and fairly bullish grab to try and get above this particular line. So what I'd really like to see is nothing happen, not to have to do anything really for this first 15 minutes, just so we can see what's given. Now, I'd quite like to get your advice on this one, mate, to be honest, because if we do end up above this trend line, would this be something of interest for you? Because if we end up, yeah, so you would potentially getting above this trend line and retesting it. We'd be looking here, right, for the market to come back up and come back down again. But
yes.
I mean, looking at that, it's looking like it might just struggle, but I think that is going to show how strong this line is. So what we're looking at is this specific line, because this specific line has been reacted to. So it's showing us really that the trend line is in play. So one of two things happens here, really. This does become a really interesting level for us. Either the market breaks up, you know, from whichever level it manages to break higher, and then as it comes back down again, we are looking for it to go no lower than that. So we're looking then for a trade to the upside, or the alternative is that it actually does hold here and maybe even create something like that instead. So if it gives us some sort of high test, you know, testing of the weekly and daily pivot closing below, that's going to lead us down. So we are in a really good spot here right now, because we are we're in trade zone. We're right in the trade zone. You know, we don't want to short it just yet. Yes, trading. Testing this level is an interesting place to try and go short, but we can let this market and let this chart develop and see what's going to happen. You know, do we get the close above the line? If we do, what does the next bar tell us? So we're waiting really for a 3-bar pattern here. One to take us higher, one to come back, and then we can maybe trade the one that comes back, as long as it hasn't got back through and poked its head back through this point. Now, if you get a bar that closes above this point and closes below that point, do you treat that in any way, Jeff?
Sorry, mate. I was typing the message.
So let's say we've got this bar going on. So we're in this region here. So this bar's opened here. It takes us higher to that point and ends up closing up here. Now, if your next bar ends up going like that and closing below, does this give you a signal that we should be looking for downside there?
Not downside.
Oh,
I'd be long above that bar,
even though it's closed below.
Yep.
Interesting. Okay, so there's a little lesson in the slingshot for me. You would ignore the downside completely.
Yes, not on my radar there.
Interesting.
But the thesis, of course, is if it goes short, I'm not in a long.
Yes.
But if it doesn't go short, we're back at the highs.
Yes.
Or certainly that trend line. So
because it's already tested the downside.
Pivots, sorry, mate.
Because at this point, because it's open there, managed to get up. Actually, let me just clean that up. Because it's gone there, because it manages to get up here and comes back down again, it's already tested this downside here. So we've opened here, we close up there, we open there, we close there. Because it's already tested this downside, the trade to the upside is on with a stop at the low, really.
That's my trade, yeah.
Yeah. Okay, interesting. All right, well, it's good to get some clarity and to see how you would treat that and how you would read that line, because that's what we've got. We've got one of Jeff's lines really here in the market. But the significant thing right now is this area of resistance. Does it manage to get through that area of resistance, you know, or do we start to see ourselves down here? Now, anybody that was late this morning, let's come out again a little bit here and have a look at the wider picture. This is the wider picture. That's the bigger picture that we've got on. And you can see the squeeze. What's it called at the end? That's not the apex, is it? What do they call it when it's this point here?
I call it the end of the toothpaste tube.
The end of the it's like the end of the toothpaste tube. That's what they call it in. That's what Steve Nissen calls it in trading candlesticks successfully. That's that's what we're looking at. So the other way that you could try and trade this is with a break of the pattern. You know, we're getting pretty close and pretty the range is getting tighter and tighter. If the pattern breaks to the upside, we aim for this point here, which is going to be right on our gap. If the pattern breaks to the downside, then we aim down here to test these lows. So we could, if people are more comfortable, just wait for the break. You know, just wait for this to happen. Just to wait for it to meander in these two areas, because we are in a, I guess, middle of the week kind of scenario. Let me just give you an update on the price points here. So we got FTSE 100 currently cruising to actually only 19% of stocks are in positive territory. So it looks like a bit of a negative day so far. I don't know if you guys remember Ashtead, a stock that I was interested in. That's starting to look a little bit heavy now as well. So I was looking at that for a potential short, and that's looking pretty good now for a cruise to the downside. But let's see what happens with that. Let's bring in Forex Factory and see what we got news and data for the day. Okay, claimant counts in the UK. Actually, not as bad as expected by the looks of that. That's interesting. Also, overnight, so the average earnings was is creeping down. Unemployment rate in the UK worse than expected by a 0.1%. Nothing else really today is of huge interest. So I wonder whether really we're waiting for Thursday, where we get a slew of data from the Eurozone and from the UK as well. And also some further unemployment claims and flash PMIs from the United States. So we are starting to get some further numbers, let this picture develop. In other news today, we've had Kim Jong-un admitted to hospital, I think, last week, and he's had complicated heart surgery. So interesting with that one. Kim Jong-un being unwell, does that buoy the market or does that weaken the market?
Yeah, good question, isn't it?
Yeah, I mean, I would suggest that a world leader being taken sick is going to be negative, no matter who it is. Things have got a little bit more quiet with the whole North Korean issue, and I also think that with him, if anything was to happen to him, the question would then be who would be next, and if we consider that as an important aspect of a developing story like that, then the country probably would not change its political leaning. So I would have thought that a world leader, as I say, being taken ill and potentially something fatal would be quite negative for the market. So let's see how that story develops as well. Is that something that could break things over? Still struggling right now to get through this monthly pivot. Might come down and have another look at these lows today as well. But it does look. I mean, the market has been buoyant enough to suggest that we don't break down. But the pattern is for lower. So let's see. Let's just see what happens. What's going to take us down? That's the big question that I've got. Looking at this now on a 5-minute chart, let's see what kind of price action we've had in the first. What we got, coming up to 15 minutes. Yeah, there's a little signal there, which is suggesting that we could see some downside coming here. So, struggled so far to get through that monthly pivot. But we're on a little bit of wait and see mode, I think, mate. I have to say though, with the FTSE 100 showing that negative print and that negative coming into play, certainly looking more heavy than it is positive right now. So I would quite like to see this 15-minute what happens with this 15-minute bar. But if this 15-minute bar ends up at the lows, that may well suggest that we're coming down.
Yep, happy days. Speaking of coming down, what about oil?
Yes,
man, what a story.
Let's check out the situation with WTI. This is what's been going on. Difficult really for me to show you exactly what happened with the WTI, because I had a contract expiring. I got this huge gap. But this basically puts us in the same area. That's the way that the futures kind of market works, and this has been the drop since. So it continues to drop. We got to keep our eye on this. And Jeff and I were talking before the show whether we should get somebody who's a bit of an oil expert to come in and maybe give us a bit of a heads up on what's going on.
We've got the Big O in tonight. He's
brilliant.
He's lined up. Yep. That's what I've been doing in the background, having a little chat with him.
Brilliant. So we got Orlando coming in later for the US session just to give us some advice on oil, because the question has to arise, do we want to try and take this market on? Because when it goes, it's going to go, it's really going to fly. But in saying that, a similar situation happened here. And this is the whole thing with things getting, the first run to the upside. People think that the first run to the upside and everything's fine and dandy and we're all back to normal again. But you can see that oil really kind of gave us a pretty good indication that that's just not the way that markets tend to work. This was the first situation when we had the report that China were buying a load of oil, and that there's an agreement between the Saudi Arabians and the Russians. Got up to that monthly pivot, and it just started to fail, and now it's down here somewhere. Now it's down right down there. But I think we got the expiration of contracts as well yesterday, I think it was. Is that enough to buoy the oil market? Well, possibly. But what I would prefer to wait for if it's going to go up this month is probably just taking out the monthly pivot. That would give us still plenty of room down here to try and aim for 50, or maybe even at least with a gap is $40 a barrel or something like that. But it's in huge problems, isn't it? No doubt, mate. It's in terrible strife, oil, and wouldn't surprise me for that to keep going right now. But let's get our expert on and see what he's got to say about it.
Yeah, look, I'll be absolutely on what do they call those things? Not tender hooks. No, not tender hooks. I don't know, whatever they are. I'll be very keen to hear what he's got to say. I'll put it that way, because as technical traders, you and I, and I know you're across fundamentals as well, I don't think I've ever seen a position like this.
Yeah.
In terms of where fundamentals and technicals are incredibly intertwined, and this is very much the case because we are so low on this chart, and the futures are showing negatives all over the place apparently. I wouldn't know how to advise anyone. I know what I'd probably do, but I feel totally unqualified to advise anybody that they should go and mortgage their house right now in preparation for this massive, which has to happen. It's just a matter of when. We all understand that.
Yeah.
Because, it's unsustainable. That's obvious.
Yeah.
But how you actually go about that is incredibly different. And I'm absolutely fascinated to hear what an oil trading expert will have to say.
Yes, absolutely. Well, it is a developing story. I mean, the thing for me about oil, when I watch oil continue to move to the downside, I look at the stock markets and recognize that. And here's another aspect of this story as well. But what I look at is stock markets and recognize that stock markets will struggle. If we have an asset class which is in this kind of area, there are going to be certain areas of the stock market that will struggle because there's nobody able to take advantage of the oversupply story. So it will be negative for equities potentially. But the big question here is we've been talking about gold as a hedge against inflation, and gold continues to hold on to its gains up here, and it probably will continue to do so. But we've been talking about gold as a hedge against inflation, and yet with the oil story, with the oil situation starting to fail, then the inflation story starts to kind of get pushed to one side a little bit because with energy prices falling as they are, then there won't be any inflation in this particular area. Just having a look at this as well, I'm just seeing that there is a head and shoulders pattern forming on this, and I wonder whether just maybe slightly higher, but certainly looks to me like we do have this kind of going on with gold, and I wonder whether that may start to move to the downside before giving us another opportunity. But I'd say difficult to know at this stage.
Yep. Just trade it as you would normally trade it, I suppose, is the advice there. And that's exactly what I'll be doing, but not gold, not oil, because I've got no idea on either subject. That's not my thing.
Yeah.
So I'll leave it alone.
Yeah. Well, have we checked out what's been going on with the CAD? With the situation with oil, what's been happening with the CAD? Let's bring that on. Hold on.
Yeah, well, it's the one I'll be watching more than anything else because
dollar CAD moving to the upside, yeah.
As oil rallies, then so will the CAD.
Yes.
So I'll be looking at that, and that's, I guess that's a proxy. Or it's not exactly a proxy for oil, but it's almost a proxy for oil. And
yeah,
that's what I'll be looking for.
Do you know what? I think the better proxy for oil is the NOK. I don't know whether we've got that. Let me just see if I've got the NOK here against the dollar.
Pumpkin?
The Norwegian kroner.
Oh, not gnocchi. Right. Gotcha.
No, here we go. Norwegian krone. Well, that's doing all right, but you know, a lot of their economy is made and built up with the price of oil. So yeah, this one could be an interesting story as well. What's going on with that? I mean, maybe that's one way that it can be traded. Let's bring this in and see what we got with this. Don't like the look of that much. Well, that's yeah, the dollar Noki dollar Noki might be a bit an interesting play here. Let me just have a look at this on another chart. Yeah, it looks pretty good actually. Looking at this on a 4-hour. That's the area there. There's also a trend line down here. I wonder if it's there actually. That may well have broken through. Yeah, I would have thought this one could be of interest. Depends if you like the dollar. You know, if you like the dollar, then that one could be something of interest. But if you
it rules me out.
Well, if you see, it depends what currency you like. But actually, you know, another currency against this could be something of interest. I would have thought.
Yeah, well, I've got no problem with that. As I say, I'm a CAD man, and if I see any sign of oil getting off that base and putting in a higher low, then I'll be looking for the CAD very much so.
Yeah.
Because the more it suffers, you know, the more it's likely to move in the opposite direction. That's kind of where I'm at with that.
Well, we have got some. What's that, mate?
Are you done for now?
Yes, I am done for now. Just to give a quick update on the FTSE 100. 16% of stocks in positive territory, so that is leaving 84% to the downside, and we are starting to weaken somewhat here as well. So with a bit of weakness in the FTSE, it is suggesting that this may well be a selling opportunity, but we do have to be careful just because we are so close to these levels now. That's the issue there for anybody that's looking to trade at this particular point here, that you don't really have a whole lot of room before you're looking to take profit. So I would still think that if you want to trade at this area, that it might be better just to wait until that breaks down that level. And let's just move that down just a little bit for the hourly there. Yeah, very, very, very difficult to kind of make a case for a trade there with only 17 pips to the downside. So yeah, you're probably waiting for a break and retest. Now, if that was to happen, then I think there certainly is a case for an add point. If any of you have still got any shorts on, any of you that managed to take the 2-to-1 yesterday, well done. You can see that there's still an opportunity to get in pretty much the same price. If that's your flavor, and if it's not, then you're not going to be too far off. 50 pips if it does break and retest, you're only going to be sort of losing out on 50 pips of holding onto that trade, which would have been a tricky one anyway, because it did break slightly above the daily pivots in the end. So yeah, let's allow this to unfold, mate. But I would suggest that we probably have some downside to come. It's just a question of is it today? Is it this early in the story? But I also think that with the situation with oil, it well and truly could be. You know, oil could be the catalyst that brings this market down further. Now, I'm not necessarily saying on its knees, because the oil has been, you know, in the mire anyway. But does it bring it down a little bit further? And it really could be the case. You know, if oil continues to move to the downside, we might well see stock markets just around the place struggle. This is the S&P looking pretty similar. Let's just check the 4-hour chart on the S&P. Yeah, just coming off this area here. Again, right on top of a trend line just there. Let's see what that one is. Right on top of the trend line there. So watch out for the S&P. Now, that does really illustrate the importance really for us to wait and see if we can break down this level, because this really, you know, as heavy as the market looks right now, this is a buy zone. You know, we're not really in a sell zone. So just because we believe the market's going to come down, it's going to be a very difficult trade to make while we are in a buy zone rather than a sell zone. You know, so probably a pop to the upside if that's if we want to get some shorts on, is going to be the best thing to do, or let it break down and retest. I think that would be preferable, just to see if the story that we got right now with oil is enough to drag it down. You know, pops to the upside is not going to be great, because there's other things that are around that seem to be fairly positive in some respects. You know, cases are starting to subside, but we are kind of in a new phase of reporting right now. So I would think that that might well buoy the market enough. So let's watch out here. Not really looking for buy signals as yet in this market. But yeah, as I say, we're in a buy zone here, mate. So I would completely understand people just at very minimum, and I suspect this is probably what will happen. At very minimum, we're probably likely just to hold on here before we get a little bit more detail on things. So let that detail establish itself, and then we can maybe take advantage. Looks like a bit of a tricky day for me, mate. 15% of stocks in positive territory, but not a real shift to the downside in price action as yet. We're fairly stationary as things go. Just letting you know what's going on. We got looks like some of the precious metals are doing pretty well today. Still got some of the defensive names propping up the market this morning. But some of those more risk-on names, Royal Dutch Shell is the biggest underperformer, down 5%, and BP down 5% plus as well. So yeah, it looks like that oil story is filtering through, and that's what I'm watching out for. I think it is going to be interlinked today.
Yeah, look, hasn't it really got to put doubt and fear into the market?
I beg your pardon?
If it continues its fall, hasn't it really got to put doubt and fear into the market?
Yeah, I think you're right, mate. And this is the real challenge. You know, we know that unemployment is rising. We know that unemployment claims are rising. Earnings seasons yesterday got a bit of a kickoff, and IBM posted some pretty negative numbers for their offering, and we got some more earnings out today. We got a few more earnings here and there today. And that would certainly suggest that the market is in trouble. But as you say, it doesn't seem to be creating fear. For whatever reason, it doesn't seem to be creating fear. Which is the interesting thing, isn't it?
Well, it's the old statement, isn't it? The market can stay completely, ridiculously, and out of whack for a long, long time, and a lot longer than you can sustain it with your bank account. That's a fact.
Yeah,
that's not the quote, but they're my words.
Well, I think the quote is the market can the market can stay irrational a lot longer than you can remain solvent.
That's correct.
And I think that's what we're up against here. So I'm still bearish. I'm still holding on to my shorts here. All I'm really now doing is managing my short side by looking to see if the market's going to bounce. So if you guys are already shorts, then I think you're in great shape, because that's what I am. I'm fully invested short, really. I don't really have any more positions to put on. So what I do at this stage is look to see if there's any opportunities to go long, and I'm keeping my eye on that, just in case there's another leg to the upside. This is a buy zone, so I'm watching this to say, should I be buying here? Now, at this stage, I don't have any information which suggests that I should be buying. Now, I've got to be honest. If I had to sell here, I wouldn't be too comfortable because of that trend line. Selling on the monthly pivot, not the worst trade in the world, but you really do need a bar to get in at. And when we're looking at this on a 15-minute chart, this is, as I say, the challenge that you've got really right now. This is the bar you'd have to try and get in on. That leaves you at around about a 50 pip stop loss. But look how close that line is. There's just no room. You've got to rely on this breaking through there. And this is where things get very, very difficult. Trading into support and resistance is a bit of a faux pas, and it's a bit of a no-no unless you've got a really good reason to do so. I mean, there's always caveats, but it's generally speaking not a very good idea. And not only that, but if you look at this on a 15-minute chart, then really, what we have here is possibly just the hints of a first trend to the upside. So this is a whole point. So it could do that from here quite comfortably. I don't think it will, but it could. But if it doesn't do that, then what I am concerned about happening is just this. We do this, and then we do this for a bit. And then do that. I don't think that there's enough confidence in the market just to take us higher out of nothing. And it doesn't look like there's enough negativity just to give us enough fear, as Jeff called it, to take us another leg lower. So this grinding situation is going to be quite tricky because we don't really have the catalyst. So this is going to be down to what's people's speculative position here. What are they going to speculate on now? I'll tell you what, mate. I've just seen that the first half-hour bars have closed, so I'm going to hand to you so you can have a little go around the 30-minute charts. But we'll come back to this later. Basically, keep your hands in your pockets right now.
Yep, got a few questions as well that I will tackle as I go through here. In particular, those triangles you were talking about. Was it Crystal or was it Faye? Crystal, I think.
Oh, Shakri trades the dollar Noki. Sometimes brokers move it up. Dollar Noki currently the spread is, gosh, yeah, it is wide, isn't it? Actually, no, it's not too bad on this broker, actually, the dollar Noki. But yeah, okay, we'll have a look at that later on as well. But yeah, I think the spreads are wide, but that's because it's probably a nice volatile market to trade. So actually, dollar Noki looks like a pretty good currency to me.
Right, mate. Pound, first of all, hasn't been triggered. And yeah, just a quick analysis on the pound. And it's very, very similar to what I've been saying for the past 24 hours. The market is very much in a hold at the moment on currencies. I don't expect that will change too much today even. Pivots are very, very compressed. And I do expect that we're going to see a little bit more of that as the day goes on, and probably the week goes maybe across tomorrow and then into Thursday when all the news starts to come out, manufacturing news, unemployment claims, all those sorts of numbers start to hit the deck. Then I think we'll probably see a fair bit more movement. Of course, that will be underlined by the potential for anything to happen at any time in a market such as this. A tweet, an unscheduled news announcement, anything can happen. And coronavirus. Oh, yes, there's coronavirus. We've got to keep that in the forefront of our mind and I know we're all trying to get it out of our minds at the moment because, wow, it just keeps coming at us day in, day out. You can not watch television without being indoctrinated by the numbers and, all the theories that are going on, conspiracy theories about China, and goodness gracious me. Where does it end? I don't know. And euro dollar is where we're going to start. Apart from the pound, I'm sick of euro dollar. I've got to tell you. When did we trade this? What's today? Tuesday, Monday, Friday, Thursday, Wednesday. We got into it on Thursday. But look, we've gone absolutely nowhere since. It's just a terrible, terrible market. And that primarily is what I'm saying. There's a consolidation session upon session upon session at the moment. That's not a bad thing for us, because as we dig down into the timeframes, and we'll do that right now, and the question that was, I think, from Crystal, and we'll have a look at that in a minute, is the triangles that are forming and whether we should be looking for the breakouts, et cetera, et cetera. So my analysis on euro dollar today is we'll hit the bottom of this particular range, which, let's switch to a smaller time frame, if you like, which is pretty clear now. We've got a couple of equal highs and we've got a couple of equal lows, so we can actually put that rectangle on our charts. Let's do so. Which high will I choose? Probably in here somewhere. Kind of matches that low. So let's go with this high. Let's go with these lows. Okay, we can probably scramble that across here a little bit. It's not completely accurate, but it's fairly obvious if inaccurate. Now, you could probably sneak this up to here even, if you so chose. I think that's probably not such a bad thing to do. And that tells us that we are at the bottom of the range at the moment on Euro US dollar, having come down from the top, put in a lower high, and away we go. So guess what we do when we're looking to go the opposite way? We come off the bottom, we look for a higher low, and away we go long. You will note from my earlier chart, and this is not the chart I'm trading Euro US dollar on, it's the US session chart, if you like, which of course has got all the miners on it. But I've moved my not my stop loss, I've moved my first take profit level to here, and it was down here somewhere, because the market's just not moving, and I want to get safe in this as soon as humanly possible. The other option, of course, is just to take profit now, which is at about probably plus 10 pips or something, is it? Entry was there at 55, I think. And price is currently at 30 something. Yeah, so there's probably 15 odd pips there by the time we've taken the spreads out. I would not be averse to that. If you wanted to take your first profit now, take half off the table, move whatever your pips you take off here, move your stop loss into negative territory the same amount, then you're free trading. You don't have to worry about this anymore. If it does hit our first take profit, happy days. You would remove that if you're obviously going to do as I've just suggested, or you can just sit here and wait, or you can move your stop loss to entry. And again, you've got no worries here. Probably the better way is the first way I suggested. Take your profit now, and whatever profit that is, move your stop loss into the negative equivalent of that. So if it's 15 pips, move your stops to minus 15 and take half off the table. Free trade, go for your life. This could last forever. Well, you know what I mean. It could last for days and days and days, not take your TP1 and then flirt around here for a week or more. The one thing I would say, at least it's positive in terms of swaps, and then go bang, take your stop loss. No point in that. No point at all, in my humble opinion. It's really guesswork now as to which way this is going to break. Yes, it's still in our favor because we're creeping along the underside of that resistance trade line. But really, if the market's going to hang around for so long, something's changed. Otherwise, this would have gone down here already. It makes sense to me to do one of the options that I've just given you. If I were not talking to you now, I'd probably do exactly that, because I'd then go back to my other charts and do exactly that. I'm not going to let this get into negative territory again, is really what I'm saying. So either stops to entry or take profit now, and move your stops, as I said. So no idea from here as to where the next direction is. Still going in our favor at this point, but now is the time for us as slingshot traders to pay attention, because we do have an established range. And once we've got an established range, we can start to trade from the top to the bottom, bottom to the top, exactly the same fashion as I've just mentioned. So that is exactly what I will do here. You of course have to have a good setup. Now, the best way for this to happen today would probably be as a break and retest, sorry, a break, re-entry, then retest here, giving us the higher low. Then we could trade it long as a false break. So you've not only got the higher low, you've got a confluence area, support trade line, bottom of range, happy days. That's what I'll be looking to do. Will I be looking to trade it short? No. Well, we're already in a short, and we don't know what's going to happen next. So why would we add to that position? Doesn't make sense. let it get into that position and then give you a lower high, maybe, if you want to scale into it. But it doesn't make sense to add the position right now, in my humble opinion, because it is 50-50. Dollar yen, look, it's exactly the same story. Everything's going sideways. They're going in our favor, I've got to say that, but they're doing it very, very slowly. It's a very slow burn on dollar yen as well. And, you know, for the same reasons, if you haven't taken profit on this, which you should have, in fact, you should have taken profit twice, then you need to do that, because this now turns into a toss of a coin as to which way it's going to go and which way it's going to go next. Yes, we have a range formed in this little rectangle. And yes, I'd be willing to trade it long if anything was clear. But what's clear here? What's clear is nothing. We've got a higher low here. We've got a higher low here. We've got a higher low here. And now we've got another potential higher low. Why is this the higher low that we need to trade? If it's not clean and it's not clear, it doesn't exist. You're trying to read into the chart what you want to see in the chart. What I see in the chart here is a bloody mess, and that's all I see. And when that happens, it's time to just take a breather. You don't need to trade this. You're already short, or you should already be short. What you should be doing is what I've done, and that is make sure you don't lose now. I've moved my stops to here, 108.20. So we've taken profit twice, and we've got our stops well into profit. What can be wrong with that? Nothing. So that's exactly what you need to be considering. It now becomes 50-50, guys. Once we go into that consolidation phase, we really don't know what's going to happen next, except that on the smaller time frames, we want to look at trading from the bottom to the top and the top to the bottom. And it's always going to be the same formula. When we're at the bottom, look for a higher low to trade to the top. When we're at the top, look for a lower high to trade to the bottom. And if that comes at a confluence area and you've got a nice little slingshot candle pattern, away you go. Aussie US dollar is exactly the same. There's nothing happening. And when there's nothing happening, you do nothing. I know that's going to be a terribly boring thing and not easy to swallow, but it's exactly what I do, and it's exactly what I should do, because I know that there's nothing here to be gained except perhaps grief with a toss of a coin. If I get it right, happy days, but it's a toss of a coin. What I now need to do is, as I've done on the other pairs, is find the range, find the market structure on the smaller time frames. And the market structure, exactly going to the question of euro pound and euro pound, which I'll tackle in a second. What structures do we have in place, and can we trade them? This one's a little bit ugly, I've got to say, but there's kind of a rectangle in there somewhere. We can probably put one on the chart. I don't think it's great, but let's use this high, and yet let's use those lows. It's not the worst, but it's probably as good as I'm going to get here. So we've come back in once and we've rejected that. Should we come back in a second time and put in a higher low, then yep, we can trade it to the top. But at this point in time, answer no. And look, on the bigger picture for Aussie dollar, I called this yesterday. This was looking very much like it wanted to retrace, and retrace substantially. In fact, I was calling the monthly pivot as the best place to buy this. And I think that's still the case. But on the smaller time frame, if you get a buy setup on the bottom or coming back into this rectangle, then take it. No drama. Cable, we've been through cable. It also is in retracement stage, but also a very, very slow burn. And monthly pivot would be an excellent place to look for a buy once again for me. But right now it's not there. Smaller time frames, do we have a range? Well, I thought I just saw a break to the high side. Don't know what that was. Well, no, we don't really. Well, we did have. Let's put that in. So a couple of equal highs. There's a couple of equal highs. There's a couple of equal lows. We'll use those. So it's probably in there somewhere. And we've bounced off the bottom of that range at this point in time. So same applies. Back in here, maybe test the daily pivot, give us a higher low in this area, look to trade it long to the top of the range. US dollar CAD has decided that it does want to break out of here, and there's no surprise, of course, given that oil's doing exactly what it's doing. And that now is probably destined to go up to this area, I would have thought, 143.30. Not before it had a few decisions to make down here. It came off the bottom here once, didn't quite make it for a second time, and that closed below the monthly pivot, meant absolutely nothing yesterday. And who was saying they wanted to go long dollar CAD? I can't remember who said that yesterday. Somebody was looking at that. Hope you got into it. And that now looks like it might be a pretty good trade based on oil, not on the dollar, in my humble opinion. Dollar Swissy, daily chart is suggesting to me that we're doing exactly the same thing. We've got lower highs and higher lows, and that doesn't look likely to change anytime soon. So look for a market structure, same as always. Got a couple of equal highs here and a couple of equal lows. There's probably something better on the smaller time frames. No, not really. Yeah, okay, let's go back to the 4 hour and put it in. I'm not in love with it, but it's about as good as I've got. So the equal highs up here, equal lows down here. So we use that low and bring it across to there. Like I say, it's not the best. And the reason I say that is we've only had 2 tests in, what, 2 weeks, basically, after 2 close tests in a couple of days. And now we're just drifting in the middle of nowhere. So it's not tradable at this point until we get to the top or the bottom. Finally, the Kiwi. Kiwi had some good news yesterday, but it didn't last too long, I've got to say, and similar to the Aussie, and not surprisingly, one follows the other generally. We now see that the Kiwi has decided that it wants to come down and have another look at the monthly pivot as well. Again, we've got a little bit of a range forming here, not perfect again. Probably this high could come across to there. We'll put that in. Yeah, kind of in here somewhere, aren't we? This is not too bad. And we have come off the top, no lower high yet though. So a nice little retrace to the daily pivot. And maybe we get a confluence there at some stage. We could look to trade that to the bottom perhaps. But you want to get in here, that's for sure, because you've got pivots dead ahead. You don't want to be getting in at this level because you'll be trading straight into support. So, mate, nothing's really changed from that point of view. I will answer the question, and I'm pretty sure it was Crystal, about the, and Helen, yes, you probably did hear oil was at minus $40.
Yes, it was.
And that would have been futures, and I don't know futures on where.
Yeah, well, the futures contract, yeah, the May futures contract was negative $40 a barrel. It's currently at $20 a barrel. So this is what we got to see. What happens for the forward contract now in June? I think it's due to expire today, but the forward contract in June is for oil to be at, where are we at? Yeah, $20 a barrel. That starts to drop, then. And this is the thing, you know, oil is giving us a. I'll grab the screen if you like, mate.
All right, mate. I'll come back and do these others for Crystal.
Oh no, do those others now. It's okay. I'll make this point in a little while. It's not.
All right, cool. So Raymond, that's the answer to your question. It was on the futures. Nothing to keep me up at night. Just wake from quarantine dreams. Diff X's every night. Diff X's. Ex-boyfriends?
Expiry?
I don't know. Maybe they're all going to kick the bucket and I get rich. It is. It's exes, ex-boyfriends. And I get rich from inheritance or something, COVID insurance. You've got to think positive, Crystal. If you have, now I've lost it. If you have, my thing has gone nuts. Oh, I've got to go back up. It is crystal. Some charts triangle pattern also form. Please show how to draw trade lines and plan entry euro, pound, pound, dollar, euro, dollar. Okay, well, I've really been through the pound dollar and the euro dollar. So that's how we look for our directional bias intraday. And I stress intraday only. This is only 30-minute charts at the moment that this applies to. If obviously if the same structure occurs on a 4-hour chart or a daily chart, then we do exactly the same process. But right now, I'm in a situation where I'm very confident the price is going to consolidate for some time. Soon as I get that, I start to see that in the charts on the smaller time frames, and I put my fences, my barriers around price. And that, in this case, happens to be a rectangle, and the rectangle is proving that it is perfectly valid and reliable, because as we get to the bottom, we come back and go towards the top. Maybe we don't make it sometimes, but that's why we take profit, right? We don't wait till we get there, we take profit, and we take profit there potentially. Then we come back in, we look for a higher low, didn't get it here. Maybe we got it on a 5-minute time frame. I don't know, I don't trade them. Then we come and look for a lower high after we get to the top. Beautiful, look at that. Doesn't get any better. Didn't make it to the bottom, but we've taken profit. And same here, we're looking for a lower high. There it was. And we trade it down to the bottom. Now we're looking for a higher low. If we get a clear higher low, and you see how these are clear, that's so clear because prices come away and it's come back to that area. This one not as clear, but you can see what happens. We really have a little bit of a sell-off. Then we come back and put in the lower high. And look at that, bang on the weekly pivot, beautiful. That's what we're looking for, that sort of thing. So that's what we're looking for here. This is a bit of a mess, so I'd like it to get up to here, then come back and give us that clear higher low rather than just a mess like this. So that's the euro. Pound, exactly the same. So we're looking for the pound to come back into the range, give us the higher low, and away we go. Euro pound's the other one. Now, euro pound on the daily chart is very, very obvious to me what's going on, and it's called consolidation once again, because we've come down. You know, I love symmetry, and symmetry is really in play here, because as we've gone up, we came down, and we came down to the exact level where we consolidated before going up. So what I expect to happen, I expect to happen exactly the same thing that was happening from here to go on the other side. So I'm a bear in big bear clothes, and I'm looking for a sell-off here. I'm coming off a nice little range here. You can see the range there. That's the daily chart I'm looking at. That's going to look pretty good on the 30-minute chart, I would have thought. If we get a little bit wider, we can see that range in here, basically. So let's put that in. The highs are a little bit difficult to see. The lows are pretty clear. So let's put those in. That's probably the range that you've got, or close there too. You could probably tighten the bottom up to the opens and closes here if you so wished. The problem you've got now, of course, is that this is a total mess where we are. So you're not getting any clarity here at all as we consolidate further. There's where your triangles are forming, I suggest, if you're looking at 30-minute charts. So that makes it very, very difficult to find entries when you're looking at things like that. Some suggestion that that's an ascending triangle, which would tend to lead us towards breaking to the high side. Impossible to trade that from here. You've got to get away from this area. Well, sorry, you don't have to do anything, as I keep saying. I would have to get away from here to look for an entry if I was to go long. It wouldn't happen from here. So in terms of how do we find the trade lines and how do we find the rectangles? Well, the rectangles, we look for equal highs and equal lows, 2 of them. So we've got 2 equal highs, lows here, no question. You've got to use, I guess, a little bit of poetic license here, or trading license, where, yes, this is a clear high. This is a bunch of them, but it's not clear. But it'll do me, because it's very, very clear that it doesn't like it. above that level. And of course, we pick those other highs up here. So that's why I think that level is valid. And that's how we find them. The trade lines themselves, where you're looking for, and I can only give you the formula in quick terms, because it will take me a fair while to explain it to you. We simply don't have that. So the formula, if you want to write it down, to find a trade line is as many pip perfect points of contact as close to the market as possible. I'll say it one more time. As many pip perfect points of contact as close to the market as possible. So the market's here, right? In this case, we go for as many pip perfect points of contact. And I've actually got more than that, but I'll put that there for a reason, because it was a boundary. Here's your trade line for this particular scenario. Why? Because you've got 1, 2, 3, 4, almost 5 pip perfect points of contact. So that's your best trade line. If you use that one, you're not going to be far off the mark, but there's only 2 pip perfect points of contact, and it's further away from the market. So if you bring it closer to the market, this being the market, you've now got 1, 2, 3, as I said, nearly 4, nearly 5 points of pip perfect, if I bring it down a bit, pip perfect points of contact, and you bang on the market here with your trade line. So if that makes sense, that's the way we do things in slingshot land. And I think I've just about covered all that, except, Chandru, can we just blindly jump in oil and buy some? That's why Orlando's coming into the US session. I said to Ash off air before we started the show, I'm of two minds here. Do we suggest that we go out and mortgage our house and get ready for this to rally? Or do we be responsible people and trade it as we would normally trade it as technical traders? And the answer is always going to be the same for me. I have to go back to what I know. I have no idea when oil will rally, except it's probably based to the very reason that it's falling. When demand increases, so will the price of oil. And I don't have no idea when that is. Well, I know the reason why it would happen, because they'll put planes back in the air. Everyone will go back to work and start driving their cars. That's when there's demand for oil. And
do you know the biggest problem for oil is the storage? There's an oversupply in the market, and there's nowhere to store the oversupply. So what do they do with it? They have to give it away for free, because it costs the producers to actually hold on to the glut of oil that they have. So until, as Jeff says, until that there's the demand picks up. Now, what's likely to happen is that we won't know when when there's a deal going through. Just as we saw with China, if there's some sort of deal going through, then it's likely that we'll see the price of oil shoot up. Now, I don't think it's going to shoot up significantly, but that they'd have to buy a hell of a lot of oil for it to shoot up significantly. But if there is all of a sudden a buyer that comes into the market, then that may well help the situation out with oil. But at this particular stage, that's just not there. I mean, the other issue with oil, I suppose, is do we believe that there is an alternative of energy at this particular time? We know that they are out there, but are those alternative energy sources sustainable enough at this stage to take oil completely out of play? Because if it's not, then buying down here and making sure that you can afford, if it does go to zero, it's kind of like, as long as you're not, as Jeff says, risking your mortgage on it, then why not put a position in here? But the question is, are you prepared to hold for a long period of time? And if you are, then it may not be the worst trade in the world. I don't understand the oil market enough, and this is why we're getting somebody in later to help us out with this. But I don't understand the oil market enough and energy enough to know whether that's the case. If you were asking me about the FTSE, and if the FTSE was at practically zero, would it be a good time to buy? then hell yeah, you know, because stocks go up, you know, over time, the stock market will always rise. But when it comes down to things like energy, where you do have, you know, other players in the market, is that the case? And you know, it's just very, very difficult to answer it. But and as I say, it depends how deep your pockets are, and it depends if you don't mind a trade sitting there in the market, taking up your equity when there are other opportunities. As long as you're not going to miss other cleaner opportunities, then I personally wouldn't see a huge problem with that. But you've got to make sure that you're still only risking a sensible amount of your account size to trade that.
Always, the old saying is never risk what you can't afford to lose, and it's very,
yeah,
very true.
and also, I mean, you know, I'd even add to that: never risk what you can't afford to place in a better market. You know, if you've got a trade account of $10,000, then putting $100 on something is no big deal. But if you've got a trade account of 1,000 and you put $100 on, that's 10% of your account sitting there when you could actually be taking advantage of some nice clean signals. So very very difficult one there. FTSE 100 back in the buy zone. Now, this wouldn't be the worst trade in the world to buy here, but it's not really what we want. So let's have a quick look at this, and I'll show you what I'm looking at. There's no real decent buy signals here, but there is just a little bit of a grab at this stage. Buying it at this point, yeah, you're probably still looking at a 1-to-1. But we are right on the trend line, so it's not an awful place to try and buy it. And I suppose similar, you know, if you wanted to buy here, because it could actually go, you know, multiple points higher than this. The market has been buoyed enough to hang on, but it looks like we're in a bit of a hold on day to day. The one thing I would say is that the volume that is going through the market right now is incredibly light, and that would mean that that moves to the downside may not be able to be sustained for long. So yeah, not the worst place to try and buy this market. And I am looking at it whether I should maybe buy a position here, and I may well do so actually, but I'm not suggesting that anybody does so because my approach is going to be slightly different. So let me just see if it is worth it here. Ooh. This
Praise
is what I'm looking
the Lord. At. Euro dollar finally hit TP1. My God.
Well done, mate. That's what we want.
Took days and days, and just like minutes after I told you guys to either take profit or if you move your stops to entry, you've done okay. But if you took profit, you've probably lost a little bit, but not much. So, dear, it's a funny game, isn't it?
Yeah, it is. Yeah, you know what? I'm going to have to place I might have to place a trade here for the upside. Yeah, I'm gonna just take a bit of protection here. So I'm going long here with the FTSE, and I will have a look at, again if we get back up to the monthly pivot. I'll have a look again at just putting some stops at break even. Now, if you want to take this trade, you could go under this bar. Maybe better to go. Actually, going under that bar is not too bad. There's some price action there. You probably have to go under this area here. So I've taken a trade long here in the FTSE just to make sure that there's some protection in the market. But if you guys want to join in with me here, I'm not suggesting that this is necessarily a bullish market by any stretch. It's just we are at a buy price down here, and there's that monthly pivot there, and you know the market has been buoyed enough to suggest it could happen. So I'm going to get stops at break even pretty fast because I don't really believe in the upside that much. So let's see what gives here. Now I might get those stops. Let's see if I can get those stops nice and tight. I won't mind seeing that monthly pivot really before I move stops, but I probably will get on that now. Let me just pass back to you, Jeff, because I'm going to be quiet while I do all this stuff. So
yeah, mate.
I'll pass back to you briefly.
Brian, I'm going to answer your question, and I can't, mate. Now I can. All right, all good. Brian, with the higher lows and the lower highs, exactly the same thing. Look at that TP1 by a freckle. Here's the thing. I'll see if I can find you an example. Okay, so the one I spoke of earlier was euro dollar coming off the top here, right? You got a retest of the weekly pivot, which was broken, which gave you the lower high. So therefore, you've got a confluence of some kind. In other cases, you might have a slingshot setup, which might look like a false break. It might look like a trend line. It might look like a horizontal level that's been breached before. Yes, if we're coming off those, they most certainly add weight to the entry. There's no question about that. So in answer to your question, preferable, if not desirable, if not compulsory. I wouldn't say compulsory, but absolutely, definitely desirable to have something to go with that lower high, most definitely. And that's why we have things like trade lines on our charts and things like pivots, so that we've got some form of confluence, or things like, you know, the horizontal level that's clear through here. So if you've got a confluence, if the lower high, or sorry, the higher low in this case, were to look something like this, break above, put in the lower high there, and it gave you a nice bar to trade. Or if you had a trend line coming through here and you got above it and retested it, and that gave you the higher low, same thing, you're playing a false break of that trade line then, or you're trading a ABC off the top of that horizontal level. It's going to be rare that you find a higher low or a lower high that doesn't have that. You're going to have something there. You're going to have a horizontal level. You're going to have a trend line. You're going to have a pivot or something like that. Otherwise, it wouldn't stop. It's very unlikely that that would be the case. So I hope that helps. Helen, Slingshot Strategy Leader Coach. Have you joined the SLC? Awesome. Look forward to having you in there. That was last Thursday, so it'll be Thursday week, the next session of that. And because you've been in that, you should be able to look at the recording that I did for Sunday, which was a free session on the Slingshot. See if you can get hold of that. If you can't, let me know, and I'll see if I can get you into that. If you've joined the SLC, that'd be great. You should enjoy that. That session was pretty cool about how to trade the markets in these conditions. Righto, Ash, that's me, mate. Are you ready?
Yeah, all ready, mate. Yeah, just had to do some management on that. Okay, so yeah, we're chopping around around here, and I apologise that I had to come out there, but it takes my brain a little while to kind of catch up.
Nil desperandum. Wait till you get to my age, mate. Gee,
with what I need to do. And to be honest, I'm managing so many different parts here. I've got a few different accounts I'm managing, and then a few different trades in the market as well. So there's quite a few things going on. Okay, so let's see what happens again at the monthly pivot. I've put stops at break even, and I've put them in kind of early because I don't really want to get caught in on a long, if I'm honest. But but I have put that long in the market just to kind of make sure that I've got some protection if it does take off from this particular point. Looks to me that the pivots are going to be the key aspect, and just look how stacked these pivots are as well. You know, that really is sort of like telling us quite a lot about the sentiment of price and you know how people feel about the the potential movements in price as well. But as I said earlier, the volume in the market is so light at the minute. We got around about 16% of stocks currently drifting into positive territory. So still not a lot of stocks are higher, but the selling pressure is just a little bit weak. You know, we're not really seeing sort of we're not really seeing a lot of motivation for the downside. And there just doesn't appear to be enough fear in the market to drive us down. And I have to, I'm still really concerned. Not the worst thing in the world now for this market to take off for me. I'd quite like it because it gives me some room to maneuver rather than having to kind of like drift down in one area. So I'd quite like to see it up there and maybe beyond. I'm not going to change my position that this market is going to be coming down. But the timing of it just seems to be a bit tricky because it doesn't matter what news is thrown at the market, it just seems to swallow it up. It's just loving it at the minute. So protection to the upside is really, really important. And the market is a very, very strange beast in as much that when it's coming down, it is coming down. But when it's not coming down, then it can either fly to the upside or just grind its way up. This is the analogy of it goes up stairs and comes down an elevator, or comes out of a window. When it falls, it just goes. It will just fall and fall. But when you see this this kind of drifting around, it tends to just hang on to the position of going higher. Because there's just enough buoyancy with the buyers, and this is back to the argument with oil and the stock market. The stock market will go higher. That's just, for some reason, that is just the oh gosh, we're really late here. That's the direction of travel. But with oil, completely different. We're looking down here. And it looks to me that the oil may be coming down to $19 a barrel again on the June contract. This is the June contract here. But if this comes down on the June contract, then that might promote some buying at that particular point. And we were talking about if this goes to zero. So you'd be trading the June contract at $19 a barrel. Putting 1% of your account on this at zero wouldn't be the worst thing, because what then in my opinion anyway, what I then want to do if this did pick up is make sure my stops were at break even, and then you can start trading it just regularly, just as a regular market and as a regular thing. Looking down here, are there any signs and signals for upside? Well, certainly the downside momentum is slightly slowing down. It's slowing down very, very gently. Let's have a look at this on some longer term timeframes. Yeah, slowing down a little bit on that. What's the daily telling us? See, yeah, look at the daily. The daily is slowing down, and what I'm using to suggest that the daily slowing down is this is higher, this is higher. That's where's that run into? That's an area there. This one's lower, and it looks like this one's lower. So there is this divergence going on with the price versus the momentum. So because of that, there is a suggestion that that the oil may be bottoming out here. So I don't mind those trades. In some respects, if you look at the futures contracts, you are in a buy zone. So I don't mind. It wouldn't concern me to sort of say, let's go into it. I don't know enough about it to trade it, but if I saw this on the FTSE, I probably would be all over it, if I'm honest. What you'd need to see to promote your upside to protect a stop and make sure that you got enough out of it is the challenge. But if you put it at pretty much zero, if you put your stop at pretty much zero, then you've got nothing really to be too concerned with. This is 20. It means it's got to get up to 40 to break even, but that's no big deal because you'll be adding, potentially going up there. But yeah, that would be me, mate. Anyway, and I didn't realize the time. We got to get out of here.
We're going to get out of here, but just got some great news. Ainsley's just made contact. She's going to join the Big O as well. So we'll have a really good session around about, I think about somewhere between 11:15 and 11:30, or my time, which is 2:45. Or I don't know, can't remember what your time is during the US session tonight.
Brilliant. That's fantastic. So we've got some real experts coming in with the market with us later, guys. So we can have a good chat with them. And if you're in that session later on, then maybe we can ask them the same question.
Absolutely. PL, I have no idea, mate. I've got to say, because we don't run these things. We just do what we're told at the end of the day. And you would be best to contact James. So James, or contact at Actions to Wealth, is the go there, and he can tell you if that's available to you or how you could look at it or whatever. Sorry, mate, I really couldn't say.
Okay, mate, fantastic. Well, thanks so much, as always, guys, for participating and being in with us during this period. Always an absolute pleasure. We'll be back in the US session, as Jeff says, and we've had the ability to play music taken away from us at this stage, unfortunately. So we're gonna have to figure what that one's gonna be, how that's gonna unfold. Because I've got to play some Jay's Addiction for you, Jeff.
I'll just have to bring the subwoofer into the trading room. And
yeah. All right, sounds good. All right, guys. For the rest of you, we will see you tomorrow, same trade time, same trade channel at 5 to 8.
That's the dates. Don't you be late. See you guys.